Hello, everyone. Thank you for joining us. We see a lot of people coming in. We'll wait for a few minutes for the numbers to settle down. In the meantime, get comfortable. We'll be starting shortly. Hello, everyone. Thank you for joining us. We have 78 people joined. Thank you so much. We will take a few minutes to wait for maybe a few more people. We'll get started shortly. In the meantime, if you would like to turn on captioning, there is an option at the bottom to get live transcription of the program. All right, I think we will get started shortly. We'll have announcements as usual. And we'll thank you everybody for joining us through the digital space. We're really glad to have you here. We can't see your faces, unfortunately, but I know that we have a lot of familiar faces and people joining us. I have also to thank the organizers at Fordham University School of Law, as well as the Fordham Art Law Society for co-hosting this program with us. So if for those of you whom I haven't met, my name is Louise Caron. I am the executive director here at the center. Many thanks to our speakers, Dr. Evie Joselow, as well as Pamela Grutman, whom Irina Tarsis, the center's founder and today's moderator, will introduce in more details shortly. Thank you also to our interns, Tyler and Laura, who helped in putting this program and the course materials together. If this is the first time that you are attending the Center for Art Law's events, let me say a few words about this wonderful organization. We are a Brooklyn-based research and education nonprofit dedicated to offering resources and programming for the advancement of a vibrant arts law community worldwide. Through our website, our newsletter, and events, we disseminate information and keep our audience updated on art law related news, programs, cases, publications, and so much more. Now fully online, the center facilitates conversations by hosting and participating in programs such as today. And we have a great internship program as well. We invite you to subscribe to our newsletter to receive updates and to visit our website at isartlaw.org. And if you can, make a donation to support our efforts in making art law accessible. You might already know that we have a big online auction going on through next Monday with over 50 artworks and 20 art-related experiences for you to bid on and to support the center's efforts and programming. So before we begin, a few of the usual housekeeping items. This program is currently recording for archival purposes. Everybody will be muted except for the panelists for the duration of the program. If you wish to have captions on, live transcription is available at the bottom left corner of the toolbar on your screen. If you have any questions for the panelists, please ask them using the Q&A box, again, at the bottom of your screen. We will also be monitoring the chat and happy to help with any tech issues or practical questions. Further, a link to the handouts and bios with reading materials, course materials was sent to you earlier today, and I'll make sure to put it in the chat again right after I'm done talking. They will also be emailed to you after the program, along with the slides and a brief survey, which we would appreciate that you take, as the results will allow us to bring together more events and speakers of interest to you. For those attorneys in the audience seeking CLE credit, you should know this program has been approved in accordance with the requirements of the New York State and New Jersey State for a maximum of 1 credit in areas of professional practice. A code will be announced shortly, which you will need to report in an online affidavit, which was, the link was also emailed to you earlier yesterday, along with an evaluation form. And I'll put the links in the chat box in a few minutes. The affidavit and course evaluation forms need to be filled within the next 30 days. And please note that you must be on time to the program in order to get full CLE credit, and no credit can be awarded for watching a recorded version of this program. For any CLE related questions, please contact the Fordham Law Events team at lawcle@fordham.edu, and someone from the team will be monitoring the account during the program. Now, without further ado, let me introduce Irina Tarsis, the founder and managing director at the Center for Art Law, who will present the speakers and get the conversation started. Take it away, Irina.
Thank you, Louise. Thank you very much to Fordham Art Law Society for working with us on this program, and great thanks to our speakers who will get us thinking about the very complicated subjects of taxes and appraisal of art for various legacy purposes. Before we dive in, I would like to just remind you that there are a couple of interesting events coming up this month. So if you haven't RSVP'd yet, please visit our website and do so. You'll see there's a visual artist immigration clinic scheduled, and we're also hoping to take some knowledge from this program to offer additional clinical experiences in the realm of estate planning for artists later this year. Welcome to all the attendees. I see that we have a number of familiar names, if not faces today, including some of our previous speakers. And I'm happy to acknowledge that we have Herbert Lazaro joining us today. He kindly participated in our first 2021 program, and he also sent us an article that is in your handouts on the subject of income taxes for artists and collectors and dealers. All right, so what are we talking about? We are talking about 3 Ds, supposedly: death, debt, and divorce. And these headlines are kind of perfect for the subject. You will notice, if you haven't come across these names before, they're all collectors. One, a billionaire, Sheldon Salo, supposedly, allegedly gamed the tax system. And we hear that you can't really escape taxes. So I wonder how he was able to do so, if he was able to do so. Then we have a story of a protracted divorce of a couple that collected art for many years. And then, of course, a collector whose estate is now being administered and distributed through private dealers and galleries, because he had a very important and interesting collection. So we're talking about collectors, but really we're also, and primarily, talking about artists. So I'm putting to you, or putting in your minds, this Rauschenberg effect. I used to think that Jeff Koons was a poster child for art law. Now I'm actually thinking Rauschenberg is a better candidate. When he died in 2008, his legacy was somewhat preserved already, because he was represented by a number of very famous galleries, but he also established this foundation with multiple ideas in mind. Some were to preserve his legacy, and some part of the mission of the foundation that he created was to assist new emerging artists with their trajectory. So with this Rauschenberg effect in mind, I pose a question to you. What should artists and collectors do once they realize they have a large body of art in their name, but maybe no plan or no advisors to help them figure out what to do with this potentially mine gold of mine, or not? How do we know? Art is priceless. Beauty is in the eye of the beholder, but value of art, that's a different matter. So we have two experts for you to start us thinking on the subject. Evie Joselow is going to be our first speaker. Evie is an art historian by training, and bios for both speakers are in the handouts, but I'd like to just highlight certain aspects that I think are key to our conversation today. Not only is she an art history PhD, but she has been a certified member of the Appraisers Association of America for many years, and she is an advisor, teacher, and she has worked as a chief of research for the Commission for Art Recovery. There are many different art-related experiences that make Evie our expert on valuing art, not only for its beauty, but also for other purposes. In addition, I'd like to thank Evie for assisting us with our auction because she has been looking at the art that was donated and giving us her opinion on it as a member of the Board of Advisors for the Center for Art Law. Evie, the floor is yours.
Okay.
You have the control now. Great.
And I can't move. I can't get to the next slide.
Hold on, let me help.
Thank you.
So,
That's why.
That's why
Very
there's this
important.
a block. The CLE code, for those of you who are looking for CLEs, is ALLT 21. And this is the code you need to enter to get your credits. And so, Evie, why don't you try again?
Okay. I'm in it. Thanks. Thank you very much, Irina, and thank you all for attending and participating in this program today. No, still don't have the control.
You can use an arrow.
Okay. Nope.
Would you like me to help you with it?
Yes, please.
Okay.
Thank you. The next slide.
All right.
First slide.
First slide.
Yes. So this afternoon, I'd like to give you a brief introduction to these points, what you're going to take away from my little talk this afternoon. What is an appraisal? What is an appraisal report? What is the value to be determined in an appraisal report? What are the requirements for a properly prepared appraisal? Who can do appraisals? What type of market analysis is required to be done by the appraisers? And finally, what is the IRS looking for in a properly prepared art appraisal? Next, please. Yep, okay, got it. An appraisal is, next, the act or process of developing an opinion of value. Next. A formal evaluation of the fair market value of a given property. And an opinion of value is to be determined and made by the appraiser with certain qualifications. And the appraiser for tax appraisals, which we'll go into in one moment, must look at what fair market value is. The only value to be looked at is fair market value, and we will discuss that in another moment. Next. And that is all contained in the appraisal report, which is considered a written communication that contains the appraiser's conclusion of value, of their opinion of value. It's almost like reading a book. Everybody can read the same book, but have a different opinion. And an appraiser can look at a piece of art and come up with a specific value, and another appraiser can do the same thing. Basically, you have to present an argument. You have to offer evidence, just like in illegal cases. Present an argument to justify how you arrived at that value, how you came across, what the basis of your opinion is. So the appraisal report becomes the legal document, in a sense, of how to present that opinion of value. And the method of delivery is considered important. Sometimes you hear about people giving oral appraisals off the top of their head. We get that a view from the Antiques Roadshow. You just think that the experts know it immediately. But no, all opinions of value, any kind of opinion for a price, needs to be substantiated through research. And it needs to be documented in some way, whether you keep the research in a folder or file, or you write it out in an appraisal report form or even a letter. But you must have evidence. You can't just base it off the top of your head as to what you're thinking. Next, please. And it becomes very important to identify the type of appraisal that you're doing, and specifically its purpose and the intended users. For tax purposes, donation, estate, and gift tax appraisals are of significance, are major importance. And in the appraisal, you write for donation appraisal that it's for non-cash charitable purposes. For an estate appraisal, you write at the very front page of the report, it's for estate tax filing purposes. And vice versa for gift tax purposes. You have to write up front, estate the purpose. And as you can see, estate has different kinds of levels to it, with surviving spouse, with no surviving spouse, and for estate planning, which I believe are some things that Pamela will be discussing in more in depth in terms of the tax implications for that. These are other kinds of appraisals. The other most common type of an appraisal is an insurance appraisal, which protects a work of art against any kind of loss or damage, and preserves its value in some written way. Next, please. But for tax appraisals, fair market value is the value that needs to be determined. As defined by the IRS, fair market value is the price at which the property would change hands between a willing buyer and a willing seller, neither being under any compulsion to buy or sell, and both having reasonable knowledge of relevant facts. What that means is everybody who's engaged in the transaction of a work of art has the information, has done their research, has done their due diligence, presents it in a way that is understandable to the buyer as well as the seller, and therefore an agreement is reached upon a price. The IRS also continues in their definition, the fair market value of an item it should really be the price or the price that which the item is sold, most commonly sold to the public. In other words, a public record of price. These days, we hear a lot about private sales and public sales. We hear about prices reportedly sold works of art sold at art fairs. But we don't often hear about the private sale prices taking place in the back rooms of galleries or these days at the auction houses. And fair market value needs to be a public price. Traditionally, it has been the auction price. When the gavel goes down, the hammer price is listed, that is considered the fair market. However, there is an additional value added on to fair market value, and that becomes the reported price that includes a buyer's premium. Buyers and sellers these days are charged commissions by the auction houses to both buy and sell the art. And the buyer's premium is added to the hammer price. And when you look up the results of an auction, because it is archived, it is archived and it is therefore public. It will have the commission, which can be as high as 25% added onto that. And that becomes the reported price. That becomes the price that journalists report on, that the press reports on. That becomes a sensation of social media. There's one note in terms of estates that the fair market value of a particular item of property, and this includes art, automobiles, anything, is includable in the decedent's gross estate is not to be determined by a forced sale price. In other words, sometimes an estate has to be liquidated because there's nobody for different reasons. There have to be different reasons for liquidation, but it cannot be a forced sale price. It has to go back to a willing buyer and a willing seller. Next slide, please. And therefore, it becomes very important to identify the elements of a properly prepared appraisal. And this, for some, gets a little bit gray because there's really not one template that you have to follow. The Appraisal Foundation is a congressionally sanctioned organization that oversees the entire appraisal practice. I am considered an appraiser of personal property, of art, something that is tangible. But it also, the appraisal practice includes real estate appraisers who value real property, and business appraisers who go into factories and manufacturing facilities and look at the assets and liabilities and come up with an opinion of value for that business. It's the Appraisal Foundation that comes up with different ethics and guidelines for all of these different appraisal professions. And it's known under the acronym USPAP, Uniform Standards of Professional Appraisal Practice, which I'll speak about a little bit more momentarily. There are also certification or certifying organizations that you can become a member through different levels of membership. I am a certified appraiser. I had to go through peer review and submit appraisals and take a 7-hour written test on my specializations and declare a specialty. And the three major societies in the United States are the AAA, the Appraisers Association of America, the ASA, the American Society of Appraisers, and the ISA, the International Society of Appraisers, which includes American and Canadian appraisers. The ASA also has includes some Canadian appraisers. And then abroad in England, it's the Royal Institute of Chartered Surveyors, with the acronym FRICS after their names. And the idea that you're using the term surveyors sort of goes towards the real property end of it, but that's how personal property appraisers are characterized. And all three of these, major organizations, the Royal Institution of Chartered Surveyors doesn't have to think about the IRS because it's an American government entity, but the AAA, the ASA, the ISA, and the Appraisal Foundation all have one eye on what the Internal Revenue Service is recommending in guidelines. Now, the Internal Revenue Service does not specify a format. The AAA, the ASA, the ISA come out with different templates for their members, which they recommend to follow. But the IRS has recently introduced some formatting details that must be included in an appraisal, and that's involving the proper identification of the work of art, the artist, the title, the date, the dimensions, and they even want some information about its provenance. Where was it bought? And for how much? Next slide, please. All of us as appraisers, certified appraisers, and to be a certified appraiser means you have studied and taken an exam every 2 years for USPAP. It's introduced every 2 years, it's updated, and it contains different guidelines that are required to be in an appraisal, different arguments and suggestions, and they give opinions as to the different rules and regulations. Appraisers follow two standards, Standard 7, personal property appraisers follow two standards, Standard 7 and Standard 8. Every 2 years, I have to take a 7-hour class to update my knowledge of the ethics and guidelines, and then I have maintained my certification. If I lapse, I don't take it every 2 years, then I have to go through a 15-hour course that includes a test. And once you pass the Uniform Standards of Appraisal USPAP test, you are considered to be certified, but you're not a certified member of an organization which has additional guidelines, and every organization has different requirements for their appraisers, and it's basically relied upon peer review. Personal property appraisers are a rather smaller number compared to other appraisers, specifically real property appraisers. Real property appraisers are licensed by individual states and have to go through certification through the state. Because personal property appraisers are a smaller number, it is self-regulated by these different organizations and the industry itself. Now, who is an appraiser? Well, USPAP says an appraiser is someone who has to be competent, exhibit competency. They must abide by common standards and ethics. It does not dictate a style or format, but it does dictate some language that needs to be included, which includes having a scope of work that outlines the objectives of the appraisal and the information that needs to be part of an appraisal. And it also states that you must keep a work file. Therefore, even if you're giving an oral or a written report, you have to keep a file of all of it. And as I said, it's every 2 years, or if you let it lapse, it's every 5 years, and you have to go through a 15-hour course and an exam. The Appraisal Foundation and its affiliate member organizations, the AAA, the ASA, the ISA, has other requirements that say you need to be certified, or you should be certified. They have associated affiliated members. And if you're certified, you need to meet certain educational credentials. This has become really important. Who is an appraiser? What are your credentials? And if you're a certified member, you declared an area of specialization, which has been tested and reviewed by peers. You take a subject test and you submit appraisal reports, which are peer reviewed. And you're like this today, you are required to take some continuing education credits. We don't call them CLE credits, but you are required to take a certain number of credits per year to maintain your certification. Next, please. Appraisers need to look at, to do market analysis. And that is part of coming up with this opinion of value, showing that you have studied the market, you have done the research, you have pulled evidence away from the market that you can now form your opinion of value. And USPAP requires us to consider 3 different markets. The sales comparison is the most common market, the one that's most commonly used. Where you go out into the art market and you look for comparables, you look for auction sales, you look for exhibitions, you look for market research on certain artists or certain trends, and it's a direct comparison of what's going on in the market. But sometimes you have to consider cost approach. It's not in the marketplace. It was custom made. What would it cost to have it remade or replicated by the artist? That's the most common with design and furniture. I haven't come across it, or I've come across it actually with murals. A mural that's on a wall that cannot be removed. What would it cost to replicate it? And then finally, you need to consider the income approach. This has to do with licensing and intellectual property. Is there a money-making aspect of selling your art? Is there an additional profit that you're getting out of the art? Most commonly, most regularly used is the sales comparison approach, the cost approach and the income approach. You have to, in the appraisal, say, I've looked at all 3, and this is the one that I'm using. Next slide, please. So this is basically the 4 areas that you have to consider for supporting your valuation conclusions. You have to make a general market analysis. What is going on with contemporary art, if that's what you're looking at? What's going on with the sale of Impressionism or 19th century art? You have to be as general as possible. Then you go specific and go directly into what is the market right now for that specific artist, or similar artists who are doing or artists who are doing similar work if you cannot find a market for the artist. And that's the research. That's the benefits of sometimes being an art historian and having the research skills to do this, because if you can't find values, that's part of the story to tell. And everything has a value, even if it's $100, everything can have a value attached. But if you go into the marketplace and you can't find anything, you look at artists who are doing similar works to come up with a value. That is how you form your judgment of an opinion. But market evidence has to be actual prices realized. It cannot be assumed prices. It cannot be pulled from the clouds or chandelier prices, as they sometimes refer to in auction houses. And not only do you have to identify the market evidence you're using, the sources, but if you speak to consultants, you speak to art advisors, you speak to dealers, you speak to other specialists, you also have to identify them and presume that what they're telling you is indeed true. Next slide. So, art and the IRS. In your handout materials, you'll see lots of different publications. The major ones that we look at or consider is 526, 561, and Form 8283, which is filled out by an appraiser, a certified appraiser. It's signed by me upon completion of a donation report, and it is sent to the institution that is accepting the donation and signed by them, clarifying that the art was received on that date, the effective valuation was received, and this is attached to the taxpayer's form along with the appraisal that supports the valuation. Sometimes the institution that's accepting the donation, known as the donee, will request a copy of the appraisal basically for the research. But in this form, on this form 8283, you have to list the price that you are placing upon the object. There are some other forms, IRM 4.25.12, the estate and gift tax valuation assistance, specifically section 4.25.12.1, which was recently revised. And it's important to keep a tab on, the IRS is constantly making changes and edits and trying to be as updated as possible. Specifically for donations of property with a fair market value of $20,000, the IRS requests an appraisal be attached to their tax forms when taxes are filed. Next slide.
Evie?
Yes?
I wonder if we can go through this a little bit faster.
Yes, this is my second to last slide. I will just keep this up here as the idea that the IRS offers different art advisory services. They have an art advisory panel that reviews appraisals, and I'll give you some information about that panel. They also provide art appraisal services, where if you're dealing with a very, very big collection or estate that has a very high value, you can ask them in advance for an evaluation. As you can see, though, the price is very costly. It's $7,500 for 1 to 3 items. And often clients don't want that. You can also see some revenue procedure documents here, which takes me, I believe, to my last slide, which is about donations. Again, I mentioned over $20,000, you have to have an appraisal report. For items valued over $50,000, the art advisory panel can consider it. And it's often used in connection with the tax return. In addition, for donation appraisals, the IRS states that an appraisal cannot be prepared more than 60 days prior to the effective date of donation. An appraisal can be prepared anytime after a donation is made within that tax year that the client wants the tax deduction. So I've briefly given you some ideas to think about and happily turn it over to Pamela, who will offer more.
Thank you, Evie. A few questions that came in, or comments really, about certification, that USPAP, for example, passing it does not make you certified, and Appraisal Foundation does not make you certified. Where do these certificates come from?
You are able to say that you are a certified appraiser if you pass USPAP. You can say I'm USPAP certified. That's the language. The Appraisal Foundation does not do any certifications. The various art organizations do the certification. I see somebody disagreed with me on that. I'd have to go back and look at that.
Okay, well, we can go back. There's also a question about charging buyer's premium on the sale of NFTs, and whether we can use the results, or whether appraiser called in to appraise a collection of NFTs would be using the results that we're seeing today.
Well, NFTs are like brand new. I mean, this digital art has been around. This artificial intelligence has been around. Art has been around, but NFTs are now this new thing, and they're happening rapidly. You hear about artists going on Instagram and getting accelerated prices. Is this a trend? Is it going to be sustainable? There's all kinds of questions. I don't think the market's developed enough that I can clearly answer that question. It's going to need to be a little bit more time for that information.
Thank you. All right, so the next question, or a bucket of information, is consequences. What happens when an artist has spent a lot of time creating her body of art, or collector has been collecting for a long time? There are a number of ways of disposing of collection, right? Evie touched upon it. You can either sell it at auction, sell it through a private dealer, give it as a donation, or maybe give it to your heirs, or give it to some other organization to appreciate, not financially necessarily, but appreciate as much as can be done. So our second speaker, Pamela Grutman, she's a fellow Cardozo alumna, and she's our tax law expert. She advises all members of the art community, collectors and fiduciaries and dealers and artists, about trust and estate planning issues, estate administration, and her focus is sometimes on sale and income tax consequences. So Pamela, what are the consequences, and how can we help artists or collectors think about what to do with their trove?
Thanks, Irina. I'm excited to be here, and I just want to make sure I can control the slides. So just to preface my talk, there are some hypothetical examples in here that sort of look like you're in a tax class. These slides will be made available to you, but I've actually gone through some of the consequences so you can see what tax might be due on these kinds of transfers. But when I'm sitting down with a client and we're talking about legacy, tax isn't necessarily the decision maker. It's often the best tool we have available. It might be the heaviest tool. But first we're looking at, legacy. What is this person's family, friends, philanthropic intentions, and what other assets do they have? Art can be the most fun for me to plan with, but there are other advantages using different types of assets. So today's talk, we're focusing on federal tax consequences, specifically about works of art. And we're kind of moving some of these other considerations off to the side, even though they could potentially be way more important to the artist, collector, or dealer I'm talking with. Let's see. And there are different types of taxpayers. The artist, the dealer, the collector are treated differently under the tax code. So we always have to figure out who are we talking about. And then, as we've mentioned, there are lots of different types of transfers. I'm going to be covering about 6 semesters worth of tax in the next 10 to 15 minutes. So hold on to your seats. I know we have a lot of students on the phone, but we also have tax experts. I was lucky enough to take an art law class from Herb Lazarow, so it's a little intimidating to be talking to him, but we'll try and make sure that everyone can keep up today. And then we're talking about different types of tax. Most of us think about income tax is what we have to make sure gets paid by April 15th, but there are also transfer taxes. We usually think of gift and estate tax together because since the 70s, they've been unified under the code. And in addition, we also have this thing called the generation skipping transfer tax, which is like when a grandparent gives something to a grandchild and we're skipping the parent generation. But today we're going to focus on income tax and gift and estate tax. And income tax has become even more important, and lifetime transfers have become more important since the 2017 Tax Act, where the exemption amounts have jumped so much. A married couple can potentially transfer up to $23 million without triggering using any of their gift or estate tax exemption, using their gift and estate tax exemption and not paying estate tax. So lifetime transfers have become even more important in managing basis, which we're going to get to in a minute. We're also thinking about different types of estate planning techniques, or selling things, donating things, creating exempt organizations, fractional ownership. These remove assets from a taxpayer's estate, and by freezing that value and removing it. But what's the hardest thing for my clients to wrap their minds around, their hands around, is that they have to give up control in exchange. So first off, income. When we're talking about art, are we talking about it as an ordinary income asset? Are we talking about it as a capital asset? Both types of income from the sale or exchange of these items are going to be included in gross income, but we're going to have different tax treatment. Preferential rates will be applied depending if we're talking about ordinary income or capital gains. And we define a capital asset by what it is not. That's the code will often do this to us, doesn't give us a direct definition, but we have to extrapolate what something isn't. So for artwork, plain and simple, you create something yourself, you create an artistic composition, your personal efforts created that property. We're not a capital asset, we're ordinary income property. So that's for an artist. If you go back up a level in the definition, property held by a taxpayer or primarily for sale to customers in the ordinary course of his trade or business, that's the definition of a dealer or gallery. We're talking about inventory. These are going to be ordinary income assets. And then if you drop down to 1221C, which you can see at the bottom of the slide, that's a very weird definition. What does that mean? That means a taxpayer who's received property from either a dealer or an artist is also going to be treated as ordinary income property. Essentially, if it's been gifted, we're usually looking at gift situations. We're still flying. So when do you get preferential treatment? When something's considered a long-term capital gain. That means you've had to hold that capital asset for more than 1 year. Okay, now the all-important basis question. What the hell is basis? Excuse me. Basis. So most people, you start with, what did it cost you to acquire this object? And for a collector, that's really easy. They know what they paid for it. For an artist, artists actually get to expense their costs under the code. So artists usually don't have any basis in the property they've created. But when someone dies, whoever inherits that object, that artwork, is going to get to step up their basis to fair market value. But if you've been gifted that same work during the lifetime, I'm going to give a gift to Irina. Irina's going to get my basis in that property, and we call that a carryover basis. And so basis tracking really it's going to implicate all of the tax consequences that we're going to talk about. Okay, so now we get to our first example. We're still talking about income tax. We have a lifetime sale. The work's held for more than 1 year. Look at how differently the tax code is going to treat the artist and the collector who are in the same marginal tax bracket. 37% is currently our highest federally. So the fair market value of the painting is $10,000. They both have adjusted basis of $5,000. They're both going to have $5,000 includable as gross income, but the tax rates are different. The collector's going to get that preferential 28%, and they're going to net more from that sale than the artist would. So that's what this slide's about. But let's say we wait until death. What happens then? So now the fair market of that painting as of date of death is $20,000, still same cost basis of $5,000. We have the full amount, the full fair market valuable is includable in the gross estate, taxed at 40%. And so you're gonna have a tax due at $8,000. If we sell that estate, immediately sells that work, we're not gonna have any income tax consequences because the cost basis got stepped up to the fair market value as of the date of death. So our net to the estate is $12,000.
Pamela, very quickly, so does that mean an artist or a collector thinking of disposition needs to think whether they're disposing of something during their lifetime, meaning they're selling or giving it as a gift now, or through their will?
Absolutely.
After?
This is the assumption that we're really looking to bring cash to the beneficiary. You know, we're trying to think about, you know, because either because we need it for estate taxes or because the beneficiary needs the money. But that goes back to the very initial conversation. What is the intent? Is the intent to preserve the artwork? Is there a scholarly or educational purpose to this particular piece of work or collection of work? Sorry, I got a little note there. Didn't know what that was about. Or is this to bring value to, you know, your future generations, that they have money to go to school or start a business or do the other things that might be important to that family.
One more follow-up. So artist endowed foundations effectively receive a step up in basis because they receive collections after artists pass, supposedly.
Correct. That's usually the way to do it. That gives the estate the best benefit. And yeah, well, these are so distracting.
Thank you.
Okay, but please jump in with any more questions. It's helpful for me to explain some of these things further. But again, we're flying through, you know, 6 semesters of tax right now. Okay, so this goes along with what I was saying. If the intent is to sell the artwork, you can put a direction in the will, and then those sales expenses can be deducted for estate tax purposes, as opposed to there were some changes in the 2017 Tax Act that certain sales expenses or other kinds of costs to an art collection are no longer deductible. But if an executor has been directed to do so, they may now be deductible. So that's just a little tip for you practitioners out there. Okay, so I'm going to go through an example. What happens if something is gifted and sold one day before death? I'm sorry, this is the same example, except now what happens if that same artwork had been gifted and sold before someone died? You would have had the gift tax consequences to the decedent. So if the artwork was worth $20,000, you're going to be taxed a gift tax at $20,000, which really means that that person needed $28,000 of value to make that gift. And then you're going to have income tax consequences to the beneficiary. And so the beneficiary will receive about $14.4 thousand on this, but the total taxes paid will be $13,500 or $550. And when I'm doing planning, I'm never looking at tax consequences to a single person. I think sometimes we can get siloed on who is the specific taxpayer. We're looking at a family or a particular, you know, however we just are going to define that term, but we're looking at how we can preserve the most wealth as possible. So we're looking at individual beneficiaries' tax rates. We have a marginal tax rate system. So potentially this beneficiary here, maybe they were only in the 10% tax rate. And so I did the math actually earlier. And if they were in the 10% tax rate, the total taxes that would have been due are, maybe only, I think we're about $9,500 or something like that. But there would have been significant tax savings if that beneficiary was in a much lower income tax rate. Okay, so now I want to move into charitable giving. Recently, this made the news. Christo and John Claude's collection went to auction at Sotheby's, raised millions of dollars. And the press statement was something like, the beneficiaries of the estate are planning on setting up a foundation, which means the foundation probably wasn't included in the testamentary documents, which means the estate didn't receive a tax deduction for these potential sale, for these transfer, and the beneficiaries are retaining those income tax benefits for themselves. That's the conclusions I can draw. And depending on how these works were acquired, depending on what the basis in them was, this may be a really good plan. I'm not particularly sure of the details, but every artist, every collector kind of has their own thing going on. And it's, it's interesting that they decided to sell all the work. Nothing's been retained. I'm sorry, nothing has been stated if anything will be retained for the foundation, or if they're just going to fund this foundation with cash, from those proceeds. So this comes up a lot, and this has changed in recent tax law. That what happens when two artists swap? It happens all the time. Two artists get together, they say, "Hey, I like that one, I like that one," and they exchange. Under the before 2017 changes, you could basically defer all of the income tax consequences under Section 1031 because they were both considered property used in a business. I won't go through all those details. But now it's as if artist A has made a sale, artist B has made a sale, and now they've purchased something new. And so they're going to have a tax, they're going to have an income tax on that sale. And then when artist A goes to sell that work, they get a basis of what was includable as gross income from the previous sale. So you'll see that $1,000 over here. This carries over. I just did something that I shouldn't have. Okay, so there'll be a second tax due, but the second sale will be treated as capital gain property because they've held it for more than 1 year. And again, you can take these slides and sort of investigate this a little bit further for yourself. If that same artist holds on to that painting and dies with it in his estate, there'll be an estate tax due. It'll be includable in the gross estate. Tax will be due, no income tax, assuming it's sold for the amount realized is the same as the fair market valuable includable in the estate.
There is a question that I want to interject now. Sorry about the interruption. What happens if a gallery has a work of art on consignment, the gallerist dies, and the work somehow gets sucked into the gallerist's estate? What are the consequences?
If the work was on consignment, it doesn't belong to the gallery, nor does it belong to that dealer. So it should have no consequence on that dealer, on the gallery owner's estate, if that's the question. And that's why you file your UCCs.
Topic for another conversation.
Another conversation, but not only do you need to take a tax class, you need to take a commercial law class. I know there are a lot of students online. I think I'm stuck.
You're fine.
Okay, now we're fully moving into charitable contributions. So now you can get an income tax deduction, you can get an estate tax deduction. You also get a gift tax deduction. You don't automatically get exempted from gift tax without Section 2522, which says so. And then also, I was reviewing some things. Section 2503 also exempts loans to public charities with related purposes also from gift tax. Otherwise, that loan would be taxable. You're making a transfer of some value. So that's always important to remember, that the tax code does protect these sorts of transactions. And now this is a question I get at least once a week. What is my income tax or estate tax deduction for making a contribution to a charity? Do I get fair market value or cost basis? And what people are referring to is, what's the contribution base of my donation? Is it going to be my cost basis or my fair market value? And then based on this chart, you can see it's not a straightforward answer. You need to look at the type of organization you're donating to. Is it a public charity? Is it private operating or private non-operating? Is it a trust? Is there a related use, et cetera, et cetera? And then you also have to look at the taxpayer. How long have they held the work? What kind of asset is it in their hand, ordinary income or capital gain asset? And eventually you find the right spot in your matrix and you figure out what your deduction is. But sort of as a shorthand, we say if it's capital gain asset, you're probably looking at fair market value deduction. If it's an ordinary income asset, you're looking at a cost basis deduction. So I know I'm running out of time, so I'm going to pick up some steam and we'll do this. So I also ran through a few calculations for you with the estate tax when you get a charitable deduction. And you can see here, same painting being donated using your basic exclusion amount. In one case, by making that donation, you're not going to have a tax due. And that's what many of these artists endowed foundations are using the testamentary foundation or setting up the foundation during their lifetime so that they're not paying an estate tax and causing a fire sale of a huge collection of that artist's work at the time of their death. Okay, now this is the fun stuff. Trusts. Should I make a transfer to a trust? And if you're an artist, I'm probably going to say no, because especially if you're young, why would you give up that level of control early in your career to make that transfer? Because even when trusts are revocable or able to be amended, you're essentially giving other people control over your assets. So there are lots of different kinds of trusts. That's 2 semesters of tax that we can't go through today. But basically you're looking at the difference. Is the trust revocable or irrevocable? Is it a grantor or non-grantor? You have to look at who the beneficiaries are, trustees. They are tax creatures, but they're also creatures of the contract. They're private contracts between individuals and institutions, or between individuals and individuals, to control the assets. That split title and beneficial use. So the trustee has title, but the beneficiaries have beneficial use of those assets. And most artists don't want to put themselves in that position yet, unless they sort of can see the end of their life. Collectors may, these things can work out great for them. And so I've given you 3 examples here: a transfer to a non-grantor trust. So there'll be a transfer tax and then income tax on distribution. A grantor trust, again, you're not going to have those transfer taxes because a grantor trust is considered to be the same taxpayer as the initial grantor, but you're tying up who the beneficiaries are and how that will and how distributions can be made. And then if that trust were to sell the painting, the grantor is the taxpayer. There are a lot of complexities involved, and so I'm sorry I'm giving this short thrift. These are kind of my favorite trust at the moment. This charitable remainder trust. This has a dual purpose. You get to benefit your family, and then you also get an income tax deduction for the eventual disposition to the charity. So the painting gets sold into the trust because there's a charitable purpose. There's no or very low capital gains tax on that thing. There will be a transfer tax for the gift portion, but you get the income tax deduction for the charity. So those are lots of fun. And if anyone's interested in learning more about them, send me an email, we can talk.
Brilliant, thank you. Wow, we just covered 6 semesters.
I think so.
Excellent. We received a number of questions. Some are way too technical. I think they should just be forwarded directly to Evie and Pamela. Evie wanted to make sure that there's clarification on language. There's there's no USPAP certification, there's USPAP compliance. So just make a note about that. The reason I put up another obituary, I like reading obituaries. I think that's, maybe we share that affinity or not. So the sculptor who created Charging Bull passed away last month in Italy, but given that a lot of his works were in New York, I don't know if he left a will or not, there may be questions about the legacy that he left. And we're talking about the subject of public art later on in April, so if you're interested in this topic, do join us. But when you look at, let's say, obituaries of artists or collectors, how do you read into or between the lines? What do you expect to see? Do you expect to see a will, or no, there's probably not going to be a will now, there's going to be pre-death arrangement of all the assets. And the estate will ask for certain appraisal services, and then the trust will ask for other appraisal services. Can we talk about maybe this example or another example and dissect it in that way? I know that it's 1 o'clock now. I hope that you can stay for a few more minutes to answer questions. And if our attendees need to sign off, Luis is going to put the code again into the chat. But here's the question to you is, when you're looking as an outsider, not necessarily advising artists or collectors, but when you're looking as an outsider, what are the questions that run through your head vis-a-vis the assets that these people have created or accumulated?
I'm always thinking, did they do any pre-planning? And it's often very difficult to know because, especially trusts are creatures of private contract, and collectors and artists, even if they've made these sorts of transfers, will still put their work out under their own names or under a company name. And because we have a lot of privacy in the United States, we don't necessarily know who owns those. Trusts don't have to be registered at all. And IRS filings are private. So I'm always shocked when I find out someone like really huge didn't even have a will, but only the last statistic I saw is like maybe 37% of Americans have a will. So I guess I shouldn't be that surprised, but I still am every single time. I'm surprised when people who have the means, this is not an art example, but when Larry King, who probably has 1 million advisors, decides to write a holographic will, which are inadmissible, trying to disinherit a spouse, those things always really surprise me. And just, sometimes sophisticated people, they don't want to follow advice. But, back to your question about art specifically, I like to see when, sometimes someone will pass and a long-term loan will become permanent at that institution. And then that there was some pre-planning done. That's always nice to see.
Evie, what about you? Oh,
there I am. Okay, hi. You have to consider it all. You have to consider the parts in the whole. It really goes to looking at the market and seeing at that moment where it all fits together. That it's part of a larger market. It's the artist is part of an entire part of an individual market, or there is no market. So I would say my answer would be that it's market determined.
Thank you. There's a question about reporting value of art to the IRS. There was a number of 20,000 given and 50,000 given. And the question is, does this apply to a single work of art, or is it a total value of works being donated?
My understanding is if a work of art is valued over $20,000, then it requires an appraisal. going a little bit smaller, it's recommended if anything's $5,000 or over that you do get an appraisal done, but at 20,000 it's required. It can be an accumulated number to reach those values, but it's artworks that are valued over $50,000. You can have an appraisal that has many different values that are subject to the art advisory panel.
Got it. And we have a very helpful comment about like items.
Right.
Right.
But that's the market is comparable. It's something that is comparable in the market, whether it's by the same artist or a different artist who's working in the same type of art.
Indeed. Evie, in your slides, you gave a reference to Ileana Sanaben's estate. And many of you probably know that Rauschenberg, because he is a poster child for today, his work was in the dealer's estate, and his work was appraised for tax purposes, I believe at its zero, because it had a carcass of a bald eagle attached to the work, where in the United States, you're not supposed to sell this bird or any parts of this bird. And the IRS actually took notice of that bold appraisal and challenged it. Do you have any comments about how to strategically approach the information that is given to IRS for these purposes?
Well, I know from the Sonnabend case, there were 3 appraisals. There were appraisal reviews. There was the original appraisal, and then other people brought in to do second appraisals and opinions. Let me see. I'm sorry, the question again.
What would be the lesson learned, for example, for an artist who is using endangered species parts in the work? Is appraisal going to be based on fair market value or illicit market value, or?
I always tend towards looking at fair market value, but there is room to consider other values. But for me as an appraiser, my mind is always on the fair market value. The fair market value, because that's the one that's most accountable.
Yeah, IRS representatives have said though that appraisers need to look at all markets, which really feels like a big shift. And I still think many of us practicing in this area are still kind of shocked over how they can come to that. You know, if you read the IRS code, willing buyer, willing seller, knowing all facts, you know, an illicit market doesn't seem to come under this. But the Canyon case, or the estate of Ileana Sonnabend, has really changed that in the last, I guess it's 10 years or so.
I agree. There's also, you do an appraisal and then a couple of weeks later, a work of art appears in the market and it changes the value. You're also able to consider, in some cases, the fair market value after, in a certain time frame, considered time frame after, if it comes up. There have been cases and IRS considerations of that 2 weeks after you did the appraisal, there was a sale that came up and the value is different. So you have to look at even beyond the effective date of the appraisal in some cases.
There's a question of maybe examples of most interesting pieces you have appraised, or most interesting collections that you have dealt with.
I find that difficult because every appraisal I do, I fall in love with it. Every work of art I see as an art historian makes me pitter patter. So I find it, doing appraisals is like solving a crossword puzzle, and each work of art presents some new challenge, some new idea, and something really exciting for me. So I can't answer that with a specific example, because I've been told the appraisal you're working on, the next one's going to be even better. So it's a continuing story for me.
Pamela, what about you? Any outstanding or interesting types of property that you had to?
I mean, in my planning work, I get to work with a lot of living artists, and I think that's sometimes the most interesting work because you're balancing their personal concerns over understanding their place in art history and and the market, there's a little bit of psychology involved, and so those are my favorite projects, and you often involve charitable organizations as well. So I get to do it all, as the case might be.
So I guess $1 million question, where should one start? Should one go to auctions and look at how the art is doing? Should one find an organization, or should one, it's probably priorities, but do you go to a tax attorney first, or do you go to a trust and estates attorney first, or do you go to your own archive and see what you have? And where should artists and collectors start thinking about their estate?
It's a team effort. You can't just work with an attorney. You can't just work with an advisor, or just, use your internal records. You have to have all the right people on the bus, and it's an ongoing process. The law changes, your assets change, your family changes, and your intentions change. So it's not something you do once necessarily.
Right. And it sounds like one cannot really do it alone either.
You shouldn't do it alone. But starting by yourself, just to know what you have and what you want before you start listening to other people's opinions is always a good course of action.
Brilliant. We are ready to wrap up unless somebody has a really the dying to ask a question. Don't die to ask a question, take your time. But you are welcome to reach out to our speakers and ask the specific questions. You're also welcome to subscribe, if you don't yet, to the Center for Art Law mailing list, and we hope to see many of you at our upcoming programs, and hopefully the information we've put together for you is helpful. It's making you think about priorities and directions. And my great thanks to Evie and Pamela and to Louise and everybody and all of our students who have worked on the materials. I have learned a lot. Thank you. You've actually clarified a lot of gray areas in my brain. So thank you so much. And we'll see you soon.
Thank you. It's been a pleasure.
Thank you, everybody. We'll be sending an email with the follow-up and surveys and everything. So you'll hear from us, and we hope that we will hear from you. See you soon, and be safe.